Scale is the blockchain that's truly built different. Explore more at scale.space/ecosystem and follow them on X at Scale Network. Hey everyone, before we get into the show, just some quick housekeeping notes here. We're conducting an audience survey of the Forward Guidance audience, and we're just trying to gather feedback on what are some of your favorite parts of the show, what could you see improved, and what's your general vibe of things so that we can try and improve it. So the link to the survey is in the show notes. So if you could fill it out, that would really help us with improving the show for you as we move forward into the year. Thanks, everybody, and back to the show. All right, welcome back to another episode of Forward Guidance. And joining me today is Alex Campbell. Alex is probably the most ideal guest I could dream of for the current situation at hand here. So we're recording this today on Tuesday, January 28th, and it feels like markets have just been rocked by the implications of AI from recent developments in China. We had the DeepSeek AI model that came out in recent weeks, and that sort of just made everybody rethink a lot of things. So I'm excited to have Alex on the show. Alex has a storied career. He was the head of commodities at Bridgewater. He's ran his own global macro fund, and now he's also the founder and CEO of Rose AI. So he's also an operator and founder in the AI space. So we're gonna lean on all those different hats we've worn over the years as we try to unpack what the hell is going on. So it's great to have you.
Thank you. Thank you for having me. It's always great.
It really is. Okay, so Alex, I want to let you set the stage here on the lead up in recent months. You've been pretty active on Twitter, in somewhat predicting some of these potential, news coming out of China. So I would love to just have you set the stage on what has happened in the last week that has shocked markets, that led to Nvidia to go down, its biggest single day drawdown, down 17%. What the hell happened, and how did we get here?
Yeah, amazing question. And I think something that a lot of people are struggling with, myself included, just for folks that are kind of out of the loop a little bit. So there's a startup that's a former, maybe potentially current hedge fund called DeepSeek. They're out of, I think, Hangzhou in China, and they released an open source model which rivals some of the state-of-the-art leading edge models coming out of OpenAI, Anthropic, that kind of thing. And the thing that's really kind of shook the market is two things. One, it's open source, meaning you can look at it, you can use it, you can fork it, you can deploy it, which is really important. We'll talk about why later. And second, from their reports, they appear to be about 30 times more efficient in training these models than the big, what they call hyperscalers out in California. And this is a very interesting dynamic that was partially a function of the chip ban that hit China. I'm not an expert on this stuff, but I think you can get these things called H800s in China. You can't get the H100s. The H100s are about twice as fast. And so what ended up happening is that, these smart guys over on the other side of the world said, well, we have memory constraints. Let's focus a lot on how to optimize the memory and how we train this model. So they took that insight and they took another insight called mixture of experts, which is you have a very big model, but you only train a small part of it at a time. And then you kind of figure out a routing system. And both of these were very effective. And so if you've heard of O1 or you've heard of, I think Claude or these other ones that are kind of on the leading edge, on a math and coding basis, it looks like these guys beat them. So this is pretty revolutionary because it means for the first time, you have access to that level of intelligence on your local computers and your local ecosystem, that kind of thing. Now, the reason that it kind of momentarily hit the market, at least our interpretation, has been this norm that, well, wait a second, training is now cheaper. Training is now essentially free. Now, this is a big leap, and it definitely changes the ecosystem. But if you play with these models a bunch, which I've done over the weekend, and a lot of people have kind of done reports on this, what you see is that the way that they make a lot of these models smarter is something called chain of thought. Now, chain of thought is you ask me a question, I restate the question. Oh, you're asking me what the price of gold is. How am I going to get the price of gold? Then you go and execute it. Then you kind of summarize it. Then you spit it back to the user in this kind of thinking area that they kind of force the model to do, which leads to way better math and way better coding, as you would expect, right? So they train the model with a ton of these math problems. And then they also used another kind of training called reinforcement learning, as opposed to, more supervised learning, which is for detail wise, it's just a different kind of training that's a little bit more compute oriented, which is the irony. So why does this matter? It matters because a lot of people now think, oh, this stuff is free. Demand for GPUs is going to go down, right? That was the first instinct, which is the opposite, okay? Because the reason it was cheaper, the reason it only cost them $5 million is because they shifted the compute burden, which is where you think about it, like, where is this analysis happening? How does it get the good scores from before the training, aka back 2 months ago, to today, to when you ask the model to do something. So if you try to run these models on your local computer, you'll find they're very sensitive to RAM. And if you hit the RAM cap, it goes super, super slow. You can't use it, basically. Okay, so what that means is that we actually see way more demand for getting the change in behavior, just the same amount of queries, to go and think through these problems. It means demand's going to go up, okay? And when you look at the model itself, it's a 670 billion parameter model. They only use 37 billion parameters in an actual thought, but that means that you need 670, you need 400 gigabytes of RAM, maybe 800 gigabytes of RAM to run this thing. Now, the other reason I think you see people kind of, I know this is pretty weedy, but this is, what we're thinking about, kind of reacting dramatically, is that you have this weird misalignment of expectations that is hitting the market, where with the internet bubble, it was, we're all connected. Okay, we need capacity to get connected. No one's making money. Oh my God, big drawdown in expectations, too much capacity for, bandwidth. Now we go through this big nadir of, cleaning up the cycle. That's the opposite of what's happening in AI right now, which is very interesting. The constraints are that you don't have enough compute, that NVIDIA is 98% of the, hyperscaler compute kind of demand, meaning that we're not in a situation where we build too much capacity. We're still under capacity. We're still behind the curve. Demand is still going to keep going up and up and up. And in fact, my view is that open sourcing AI and decentralizing it is radically going to drive demand for individuals to train their own models. You don't have to trust OpenAI. You don't have to send all your data to them. You can actually do it on your local computer. You can fork it. You can use it. It's very invigorating. So this is kind of why the market is whipsawing. You're saying, to some degree, a shaking of the foundations of the scaling hypothesis, which is just throw more energy at it, throw more data at it, and they did lose a bunch of data. But you have this amazing innovation, which is, okay, rather than have a single, what's called dense model, and someone like Ilya is the hero and he's in the room training this thing for 40 hours, these guys went and hired a ton of really smart people. They used mixture of experts to train little parts of those models, very decentralized, very parallelized, and the sum is way better than these mono repos. Okay, and OpenAI and 4.0 did use mixture of experts, is what we think. So long story short, all this block, why does this matter? Well, it matters because the cost of acquiring intelligence has gone down, but the cost of using it has actually gone up a little bit. And that's why I'm not too bearish on NVIDIA. I think it's still, a pretty critical resource. The reason that it's interesting kind of geopolitically, which is probably the more, thing I'm differentiated on or whatever, is there's this huge tension for the last 5 years, pretty much since GPT-2. They released GPT-2 back in 2019, and all the SF kind of, well-meaning, well-thinking developers kind of got taken by this mind virus that I call doomerism, which is this notion that we have to fear these machines and, oh my God, we can't let anybody see it. And I think people are just now waking up to the fact we've had almost like a 5-year freeze on open source AI in the West. And during that period of time, you've had a lot of people say, look, we need to worry about existential risk. We can talk about that more later. And they make this super convoluted argument. And this is probably where I'm the loudest and the most differentiated, which is they make this argument that, sitting from my ivory chair in Berkeley, if I'm a dictator in China or whatever, this is how they say, not me, then I would be scared of this hyper intelligent, hyper powerful object because they conflate intelligence and power. So I must crack down on it. So I'm very likely to go and negotiate to pause AI. This is ridiculous. And it's not only kind of naive, it's a little bit Orientalist, I think. It's a little bit like, oh, we're so good, we know how to do these things. Like, there's a shit ton of really smart people in China, and they just ripped your face off. And they did it with OpenAI. They did it with OpenAI, actually open source AI. And you see this today with Alibaba released Gwen, another update on Gwen, which is one of the models that went into this. And it's better at math and it's better at coding. So it's not just one company. It's AI development in the West, it looks like this. And AI development in China now looks like this. They have caught up and are now passing us. And so there's going to be a real soul-searching moment where people go, whoa, wait a second. What is it about our culture? What is it about our rules? We spent, years and years in these struggle sessions talking about, oh, we're going to kill the world and we have to be so protective, which is just such a narrow thing when you realize the capacity of people in India, the capacity of people in Turkey or wherever to make their own decisions, train their own models, and really go out there and do something. And so that's what's shaking up the market. I think in terms of is it good for Microsoft? Is it good for Amazon? Is it good for Apple? I think the best person it is in terms of the big boys is actually Apple. And that's because they have this thing called unified memory architecture, where they link their GPUs to their RAM. They make them the same chip. That means that if you want to go right now and train your own version of DeepSeek, a smaller version, even let's say a 70 billion or 30 billion or even an 8 billion, you're going to buy Macs. You're going to buy Mac minis. They get you the best dollar per GPU you can get out there, and you can actually deploy this. So we think that I think there's going to be a lot of demand for Apple actually and their infrastructure, their compute, because you're going to get this slight decentralization and localization. It also is another way to infer and train these models, not using NVIDIA if there's any supply chain issues, that kind of thing. I think on the margin, it's bad for OpenAI and Microsoft because you're going to get a lot of people who would use ChatGPT just moving over, sending their data to China, but who cares, right? Now, net, I don't think this is that big a deal, because if you go and look at, and this is the pain that I did yesterday, okay, and I know I'm just on this big rant, but this is why you come to me or whatever. Ask yourself the question of, when can I run a GPT-4 or a Sonnet on my workstation, on my laptop, and on my headphones or my phone is another way of thinking about this. And if you actually go through the work and look at the scaling curves and the efficiency, you're talking desktop might be able to run a smaller version in 2 years when NVIDIA actually has a desktop that runs Blackwell. For a laptop, you might be talking 2035. Okay, for headphones, we might be talking like 2060, and we still have to get through all kinds of battery and thermodynamic and like power stuff. Because if you were to run one of these like 600 billion models on like the battery in your headphones would last about a second. So there's real infrastructure challenges. There's real compute challenges. The demand for compute is still radically outscaling the rate at which we can slam VRAM into these computers. Blackwell is still a year or two out. So I think we're still in a really capacity constrained market. I think you still want to be bullish on the sector, although I think you want to be looking for people that are hungry and smaller and looking to fork these models, as opposed to just throwing another $1 billion in the same 5 companies.
Yeah, awesome. Okay, so that gives us a lot of fodder to jump into. But my first question is, one of the initial emotional reactions I've seen from people as they digest this news is, okay, well, China lies about everything, right? Is, how do we know they didn't make this up? And so the question arises is that, as you mentioned, this DeepSeek model is open source. You can download the model yourself and run it and piece it apart. But then there's also the question of, okay, well, how did it, this $5 million, $6 million, or whatever they used to train it, how do we know that's true or not? How do we know that there's not a bunch of, NVIDIA GPUs hiding in a secret warehouse and that's what they used? And they just, they can't say they use that because they're not supposed to be able to have them. So how can we validate that this is the real deal?
Yeah, so you could try to replicate it, which again would take a lot of time and energy, and you don't have their 5 trillion words or tokens of data. Okay, so that's the real alpha. I think part of the reason it's efficient, let's just start from scratch, is they're building on the shoulders of giants. Okay, so it looks like, and I played with this model, and if you ask it certain questions, it says, hey, I'm GPT 3.5. So there's a tell there. Initially, I thought they forked one of these models, meaning they took a llama and they just trained it and made it better. If you look at the architecture, it looks like they didn't do that. They're not compatible. Maybe I'm wrong on that. But what I think they did do is generate a lot of generated data or synthetic data using prompts from existing things. That's how it would get to the point of saying, hey, I'm GPT 3.5. And you got to imagine that that's a compressed version of knowledge, right? When you're training on the internet, you're getting a bunch of random shit. When you're training on someone's direction to make good structured data, you're going to get more efficient. So that's step one. You're standing on the shoulders of giants. You can kind of use the existing stuff. The second thing is, it does look like that the memory efficiencies are at least an 8x improvement. So if they're 30x better, you get 8x just from managing memory better. This is stuff like the numbers in these AI models are like 15 digits long, and you say I only want 8 digits. Now this matters when you have billions and billions of parameters because you get math errors, but they found a way to get through that. Okay, that's a real insight. That's a real leap. The last one that I think is going to be way more popular, and it comes to this compute barrier, is this mixture of experts thing, where you have this massive model, but you only train a little bit. And I think my ballpark was that 4.0 had about 4 to 8 experts in it. I'm not an expert on this, but that was my bet. If you actually look at the files, it looks like there's 200 experts in this DeepSeek model. So this is the decentralization, this is the parallelization, this is also replicatable. So That's an interesting thing, which is even if they are lying about the GPUs, which is possible, it's not that they're lying at it at a factor of 20. Okay. Maybe it's a factor of 2. Maybe they have a couple of GPUs in the back, that kind of thing. What's interesting and tells you that there's real money behind this, which is, I think, the other thing to think about, is it's not just a $5 million training run, right? They did a V2, they did a V1, they went out and bought a team, they do a bunch of fine tuning. You're talking a $100 million operation. When you add in, go to deepseek.com and you're asking this very big model hard questions and it's giving you answers. That's why the website's failing right now. Interestingly, and this is a huge wake-up call for Americans, the GPUs that they're using for their website, the one that you go and talk to, are not NVIDIA. These are Huawei GPUs. So they are using domestic supply chains to actually execute on it. It's still expensive. It's not a $5 million operation. It's probably $20, $50, $100 million operation to get all this stuff. But it's not a $10 billion operation. It's not a $2 billion operation. It is about 10x more efficient. And so that's the thing that I think, people need to wake up about.
Scale is the blockchain that's truly built different. Forget gas fees and waiting. Scale offers a seamless Web3 experience with fast, fee-free transactions. Whether it's gaming, AI, or next-gen dApps, Scale is here to power your future. Explore more at skale.space/ecosystem and follow them on X at Scale Network. Hey everyone, this episode is sponsored by Ledger. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Your entire crypto experience got a whole lot easier. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com. All right, back to the show. Okay, so I just want to double click on the geopolitical game theory and impacts that are arising from all of this. So as you mentioned, Silicon Valley has just been taken hold by this AI safety narrative, mind virus, as you say it. And you could argue that, this has led to complacency and a lag in development while China has just gone full acceleration. So, a lot of these big thoughts get thrown around about, okay, where does this all lead? Like if we follow the logical game theory out, we all just go max accelerationism. And then, we end up just, if we get into like geopolitical war, conflict or whatever, we'll just start bombing each other's AI data centers and that sort of thing. So like, how are you thinking about the geopolitical game theory of all of this?
Yeah. So 2 things that are interesting. One, when I was playing around this weekend, I had to go to DeepSeek to get Mark Zuckerberg's AI model, which just take that for a second. Okay. I went to Meta, I filled out the form because of course there's a freaking form, right? Because we need to be safe. Okay. I waited a couple months, whatever. I do this thing and they reject my application. Why? I don't know. Maybe the third thing I wrote was not right. Okay. So I'm on the internet and I'm trying to look at DeepSeek and they have taken this Meta model, Zuckerberg model, and they forked it, right? So they take their big model and they use it to train this other model. So when I was messing around this weekend, the irony was I had to go to China to get something from San Francisco. That's crazy. That's bad. Okay. That tells you why we're getting our ass kicked, because we're so concerned about all of this stuff that doesn't really matter in the short term. Because again, the models are not going to be super intelligent for like 10 years in a local way, that we are literally forcing the innovation elsewhere. So that's like a big thing. The second thing in terms of watch is the value of Taiwan just went up again. Okay. The value of Taiwan is going to continue to go up. There's this kind of, I think finance guys are ready for the AI wave to be over. They're ready to kind of make their money, move on to the next thing, infrastructure, that kind of thing. We're still actually pretty early. We still need a ton more GPUs. We still need tons of compute, right? Like imagine a world where you can run a GPT or a DeepSeek big model on your computer. That's where we want to go. That's what we need, right? Or in your phone. We're still 10, 20 years away from that stuff, which means traditional NVIDIA, traditional GPUs are still the name of the game, which means TSMC, right? So if you actually think about building a domestic supply chain, Intel looks kind of like a mess. We have some TSMC in, I think it's Arizona, but we're really like 10 to 15 years away from the US being able to replicate that supply chain. And we're behind China. So in a weird way, we're losing. Like we're losing more, but and the value of it's going up. And so I'm a little bit of a Taiwan China hawk. I think we should, sue for peace for 50 years and a status quo because we need those chips, really. A world where just Taiwan goes offline, blockade, that kind of thing. You basically won't see any big training of models anymore outside of the ones that exist. You would see 2 to 3 years of just total halt in the evolution of this stuff. So I'm not a person who thinks we're going to be bombing each other's data centers. I think like it's much more likely we bomb over the chips coming out of Taiwan. And that's the thing to focus on, which is navigating the next 20, 30 years of, we're getting this exponential power curve, but it's still super capacity constrained and kind of targeted.
Yeah, it feels like there's obviously an inflection point happening in this adoption curve of this technology, and it feels like, the way I would sum up a few of the key, inflections that are occurring is, okay, as you mentioned, we're going to see a further decentralization of AI because more people will be able to run open source models on their own machines eventually. So there's that. There's this idea of just open sourcing in general of the models, which is great. And then obviously it's coming through different countries and different economies now. So as you put that, and then also the fact that, okay, as this all occurs, it feels like, it's just going to be like the commoditization of large language models down to basically zero. It's going to be a race to zero, and that's going to be commoditized. So the question then comes up of what's next for this curve. So, is it going to be a focus on agentic AI and products and that sort of thing? There's also the discussion, I think only a handful of people probably knew what, Jevons paradox was last week. And now it's just, the ultimate word to be thrown around right now. So I'm curious, like, as you piece all these together, what do you see as like this next wave of AI adoption from here on out with all of that?
Yeah. So even with the really smart models, right, the smartest models, the impact in your actual daily life, in your work, is still radically under scoped. I think people are using it a lot in their personal life. I use it when like my dog gets sick and I need to like Google and the vet's closed or whatever. I'll like talk to the robot, that kind of thing. It's amazing, right? Lots of research questions. It's amazing. It still doesn't interact with like your existing workflows that well. It still doesn't do warehousing. So if you want to store data, it's terrible. It has bad memory. That's an open problem. If you want to use like really big projects, which is the dream, okay, you still end up hitting your caps pretty quickly. So you'll be on Anthropic and it'll throw you off Sonnet and put you on something dumber. Same thing with OpenAI for their $20 a month. And then that's because the robot that you're talking to, when you're talking to, because of these long chain of thoughts, a 4.0 or 0.1 is $1 million machine. Like you're actually talking to a server that can give you enough speed that it's about $1 million a year. So there's still stickiness there, right? You aren't going to see people building $1 million computes for their internal systems, that kind of stuff. You're going to see 2 to 3 years of a little bit like the tech bubble, but hopefully better outcomes of people trying to find their market, trying to get through the internal procurement team. My company does a lot of work with financial institutions and how they ingest and store data. And like the go-to-market is a bear because some guy is building his own system. He doesn't want to use your system. You got compliance, you got InfoSec, you got all these, kind of what I call New York barriers to actually implementing that technology. It's the same reason why lots of hedge funds never use the cloud or, never put their stuff on the internet, just because it's just such a pain and why do it? And when you're a financial institution, you have to make sure the data is right. And, it's the same every day. So that's why you see the big push in California. You see SaaS apps trying to use this, but there's a real paucity, I think, of real monetization coming. Right, Perplexity's faddish and hot because it does a pretty good job of like giving you answers. It's wrapping Anthropic with like some good structure. They actually apparently like ripped out the censoring from DeepSeek, which is a cool innovation. I tried to do that, I couldn't do it with my little models or whatever. So I think that's the question: is just impact to your life in terms of businesses, because you have right now it's like you're going for the Eye of Sauron. You have these like 10 companies, right? Ilias, Superintelligence, Grok. Oh, we're going to go get 100,000 GPUs and we'll get Sauron. But like Sauron is really expensive to run, as we're seeing. Like it takes a lot of compute and you need to have outcomes. And the thing that I experience, and I think other people experience, is right when it's getting good with the robot, it either runs out of memory or you run out of compute and you can't compound on it. And so then there's a new chat and a new chat and a new chat. And I think if they solve that problem, which is kind of a product problem, not necessarily an AI problem, I think you'll see a ton of use getting deployed. But right now, it's like these always one-offs things. So I think there's a lot of people using it for like, chatbots for romance or for psychology or, just structuring around that model. But it's really just the intelligence. It's the ability to query an intelligence and then connect it to different tools and interfaces. And that last step is still very human. It's still very fraught with difficulties. And for the people that think about AI taking over the world, it's still huge sand in the gears. That means that it's not going to happen tomorrow, even if some server somewhere has a 10 trillion parameter model and it's like super smart, because that model costs $20 million a year to run, $100 million a year just to run, right? And so imagine a project where it's so valuable. And when you work with these robots, there's a lot of interaction. You have to go back and forth and back and forth and back and forth. And so they say, oh, this robot's a PhD, right? And they say that because it takes a PhD level of time to get back to. And so you have to give it so much context to let it go do this thing for 20 years and come back, right? That's not what we want. We want fast. We want back and forth, back and forth, back and forth. That's how you actually do work. That's why people work in offices. So I think that's really this thing that's scary. If you're along AI, if you're along this whole trend, which is not that, we run out of that there's too much capacity or this or that, but that the problems are still way harder than people think. There's so much FOMO and hype around superintelligence and the robot's going to take over the world that expectations are just still way above the work that's required to actually use them. And so it's kind of like technology. It's kind of like the internet. It's kind of like, databases in the 90s or whatever, where you still need humans to go connect all this stuff. And that makes me bullish on humans and bullish on robots. And then the Jevons thing is just obvious. It's like I spent the whole weekend crushing my GPU. Like I didn't do that last weekend, right? So I use more GPUs. Like that's, we think that also applies to data, because now if you think the inputs to these models are compute and data, the value of compute or the cost of compute just went down, which means, if you're doing your optimization, the value of the data just went up a bunch. And so we think you'll see a big focus on data in the next 2 years.
Scale is shaking up the blockchain game. With a gas-free, invisible experience, it's the perfect solution for developers and users alike. Forget unpredictable fees. Scale's innovative model ensures smooth, cost-free transactions, saving users over $9 billion so far. With over 46 million active wallets, Scale is proving itself as the go-to blockchain for gaming, AI, and more. Explore the Scale ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network. Hey everyone, this episode is sponsored by Ledger. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Your entire crypto experience got a whole lot easier. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com. All right, back to the show. I really want to hone in a bit more on the winners and losers of this phase here, and also separate it by just market investors and also society. Because when I hear about, okay, the cost of compute for LLMs is about to crater more than we expected, I'm like, oh, that's awesome for the world. Like, how could you argue against that? But then you also see Nvidia go down 17% and you see investors freaking out. So, you also already mentioned how, Apple might be a pretty substantial benefactor of this. Obviously, there's Meta, who's gone slightly more onto the open source route of things. All those Mag 7 companies have huge, CapEx build plans that they keep announcing. So would love to just frame up the winners and losers for both, broad society in terms of just like lower cost of compute, but then also the market side of things as well.
I think people who are betting on monopoly are losers in this context. It's very clear. It's like monopolies are when you have super high fixed costs and super low marginal costs. Well, we now have a proof that the scaling hypothesis is still holding, quote unquote, but you shift all your compute from training to inference to use. That means energy. That means cost. That's why I'm bullish on silver. I'm annoying about this online because I think that the real implementation, if we're all using 400 billion parameter models, that's a shit ton of electricity. That's nuclear, that's solar, that's nat gas, all the things you kind of imagine. Disproportionately, I think it hits solar, and then solar uses silver, so that's why I'm bullish on silver. Energy use. There's a fundamental relationship at some level in like a thermodynamic way between intelligence and energy consumption. And you can't really avoid that. That's where the real frontier is. That's where the real bleeding edge is how to get as much intelligence as you can with as little energy. So if we see a 5 billion parameter model, which you can run on a gaming laptop, that's as smart as OpenAI or Anthropic, that's the breakthrough. That is when you really want to go, whole hog long. In the meantime, I think it's, being an investor kind of like always, which is you have this trend, you have, people who are going to do poorly, people are going to do well. The market is a little bit mispositioned. You want to find relative mispricings and kind of go into it. I like Apple because of this big bet, but I'm not like a, Mag 7 stock trader. I'm more of a macro guy. I'm just giving you my punt. But like, it seems like Nvidia got crushed partially because of Trump and his tariff threat. In addition to the like, oh, it's bearish on chips. It's not bearish on chips. Like, I don't think it's bearish on chips. It could be bearish on the investors of chips getting tired and waiting for crazy expectations of growth, which is more a function of how much they can build supply at this point than really about how much demand there is. There's no question about demand. Like, if I could get an H100 for like 10K, yeah, I'd buy one, right? I can't. They're 25. They're hard to get. You got to buy a million of them. So we're still a couple of years away in that context. And I think that that's the scary thing, which is, let's say we get tariffs, let's say we get some inflation, let's say Trump hikes, the Fed hikes rates, and investors get a little bit tired of waiting for these crazy expectations to actually get delivered. That's when you get a drawdown. That's when you get a stock market, versus, contraction or whatever.
Do you think that the walled garden closed source approach of OpenAI is going to be forced to relent when you see, like, do you see open source AI models just eventually winning out regardless? Or do you feel like there's a spot for those closed-end models like OpenAI?
No, this goes to like intelligence will get commoditized. Intelligence will get turned into energy. But all of the things you do to capture value from that intelligence are where the Anthropics and the OpenAIs are winners, which is they are tool using. They will have the best vision models. You can talk to them. They can interact with other things. They're trying to work on your computer, right? So these guys are focused really hard now on taking basically the amount of intelligence they have. It'll be a little bit better, but like O3 is ridiculously expensive, so no one's going to use it. Sorry. But like, let's say O1, and then trying to find applications, the app layer, basically. And when you own the model, you're just way better positioned to go into the app layer. But I also think that they do a good job of playing nice to people in that app layer. So I don't think that it's these guys that, are going to die. I think if it's probably monopolistic competition is the framework, or like kind of oligopoly with a huge open source, which is you can roll your own, but the products that come out will continue to be good enough that you'll see aggregation. And then especially those guys are way better suited to do enterprise, right? No, like, Goldman Sachs is not going to send their data to China, no offense, right? But if they have a 2-year conversation with OpenAI and the guys come in and they build them a special cloud and has all the right bells and whistles on it, they'll be the first guys actually to penetrate. So I think that you'll see a little bit of a shift away from consumer and into enterprise, into corporate, and that's where they'll make most of their money.
I want to do some blue sky, just brainstorming on tying this stuff into the big macro backdrop, which is obviously a part of your long career here. And we won't hold you to any of your predictions here because it's almost impossible to predict, but just for the sake of it anyway, I would love to just hear the first question I have is, okay, if we I don't know, linearly extrapolate these trends of AI and what could occur is you would assume increased productivity growth, which would lead to increased GDP growth is the assumption, but at the same time, perhaps simultaneously, is we see increased potential unemployment as people start to lose their jobs to AI, especially like white collar middle manager type jobs, which have historically you thought would be some of the most well protected jobs. So how do you think about those two, possibilities working at the same time together, where we see, this huge run up of unemployment potential at the same time that real GDP growth is just absolutely soaring, and inflation is staying, low because it's all productivity growth. What do you think about all that?
Yeah, so this is related to the Duma argument, okay? Because these are both arguments that say that LLMs will be a one-for-one substitute with humans. Right. And so you kind of jump. It's like you go from saying, oh, they're getting smarter. And you see this online. It's pretty funny. And the hype machine is like so overwhelming. But I'll give you an example. So there was a auction market on Manifold. And this auction had a criteria, which is we'll get AGI by 2025 or whatever. I forget, 2026. And when they first did the auction, this is classic doomer. Sorry to be so, partisan here. It was, this AI will do everything that a human does, but better. Okay. And I was like, hey guys, in the small font, you say physically better than a human as well. You don't just say computer work. So you're talking like play football, play soccer, play baseball, like drive, all the things. Okay. Well, lo and behold, a year later, they took that part out of the auction. And that tells you that everything. That tells you everything. Okay. Because if you actually go deep on the logic, you go deep on the math, you end up hitting things like Turing's halting problem, Gödel's incompleteness theorem, lots of paradoxes, okay, which is an essential statement which says there's no such thing as perfect, logic. There's no such thing as a perfect system. There's no such thing as a perfect AI. You're always going to have, whether it's misalignment or mistakes or the world changing, right? Think about during this conversation, the price of NVIDIA changed. Now, if I were to try to train a model to tell me what the price of NVIDIA is, it would already be low. It will never be up to date. That's what Gödel is talking about. It's like the notion of you're always incomplete. The universe is always changing faster than you can systemize. That applies directly to this unemployment issue, which is they go, oh, in 2 years, robots will be 100% better than humans, and so everyone's dead or everyone's unemployed. They're kind of equivalent, right? Well, I'm a person that thinks if you try to use computers on a day-to-day basis, you're trying to, log into your Zoom or whatever, you get 3 to 4 failures a day. That's what I experience. My Oact is down. I need to reset the password. My computer's broken. My mouse, literally this mouse, somehow won't talk to this thing. This keyboard won't talk to the computer. So I need another keyboard. I have all these wires everywhere. Okay, this is what I call the machine is down to don't trust machines pipeline, which is just entropy, right? When you're dealing with entropy, you need something that's a little more flexible than a machine to navigate that. That's my big, like, okay, the world's not going to end thing. The thing you should be worried about, though, okay, is when you have incredible centralization, which we're getting some of, hopefully it's not a pure monopoly and there's just one company, you think about the dynamics at a macro level. And now let's put my macro hat on. It's supposed to just like random guy talking about AI. Well, my spending is your income, and your income is my spending. That's GDP. What happens if you make an AI that puts me out of work? That means that some of that spending that used to go to me is now going to you. Now, if it's billions and billions and billions of dollars, like an Elon or a Zuck or a Bezos, you're not going to spend all that money. You have a high, what's called savings rate. So we take $1 billion from me, we give it to you. That means overall spending just went down. Whoa. So inequality is actually bad for growth in a real way, in that it channels more and more income and money into pots that don't spend the money. And growth is the change of spending, right? Growth is more spending. So if you're rerouting more of that spending to people who don't pay for it, you actually get a really pernicious situation where not only is it bad for growth, you kind of force the people who are working class to take debt indirectly or directly to the government in order to sustain growth, which is maybe that's what's happening right now. That's why the deficit is 7% or whatever. So I'm not a UBI guy, this universal basic income, right? I think you have to be a hyper super intelligence person to think that that's close, because you have to think that we're going to not only automate all this people, but have enough money to give them $30K a year of a basic income. Do the math. It's impossible. Like, you need like 10 times more GDP. And then you get into arguments around, well, how fast can GDP grow? And everyone's hyper confused. Why? Because we think about GDP as a nominal thing, dollars, right? But we measure it in real terms, stuff, right? Then inflation is the price of the stuff, right? Well, if we get a huge productivity boom, what happens to the price of the stuff? It goes down. Right? How much do you pay for photo development anymore? I used to be when I was in high school, I was a photo lab guy. We'd come in, people would give me their little roll of film. They'd be like, I need it in an hour. And I'd be like, no, the machines are down 2 hours. And they would scream at me, right? This is like New England. Okay. So now it's free, right? And I take a ton more photos, and Instagram exists, and this is that, and TikTok and all this stuff. So that's what it's going to feel like. It's going to feel like there are things that used to be a pain in the ass that are now free. And that means that the people who used to do that stuff don't have to do it anymore. Right. So I write these articles about like, where is the lamplighter? Where is the farmer? Like, where are all these people at? Like, there's no lamplighters because that's a really dumb job. Like, we should not be paying people to walk around with candles and lights in streets. Like, just stupid. Right. Our life is suffused with this stuff. If you deal with education, you deal with healthcare, you deal with anything that's a service industry, it's a disaster. Okay. that's going to change a lot of people who used to do, they were like the mediocre accountant or the mediocre coder or the mediocre, banker. They're going to do something else, and that's going to be good for everyone.
Man, I gotta say, I always love the way you Bridgewater alumni folks always break down the economy and just the spending income thing. It's always very astute, and it clarifies things nicely. So I appreciate that.
I was
The
reinforcement learned, so
there you go. Yeah. Um, okay, so something whenever this discussion comes up, I always think about, I don't know if you, I'm sure you've read this at one point, but back in the 1930s, like John Maynard Keynes made the prediction that like we would only work 15 hours a week in 100 years. We would all be just trying to figure out how to fill up our life with beautiful leisure as the economy just becomes so productive. That was his prediction in the 1930s. Lo and behold, we're still working 40-hour weeks. And
yeah.
so I'm just curious about your thoughts. Like, do you see if this trend continues, and perhaps one day we get to a point where that optionality does arise, where we do get more leisure? Do you see that as occurring, or is it going to be more so we're just going to find ways to fill up our time with more stuff? You could argue that most, middle manager 40-hour work. I don't want to hate on anybody's jaws, but like a lot of the time, there's a lot of just kind of fluff built around it. So, how do you think about all of that?
Yeah, so we are getting more leisure, right? Like I think we do work a lot less than the farmers, and that's good, right? Like email jobs are, if you're like, in a developing country, like that's pretty freaking amazing. You get paid 200K to like sit around and on Zoom all day. It's not that bad. But my approach to this is to think about why people are driving to earn money, right? And most of it is consumption interests. And what ends up happening, I don't know if this is like Maslow's hierarchy or whatever, but once you can feed your family and once you have a home, where does all the money go? And you actually realize, well, most of it goes into status competition, zero-sum games, right? You send your kid to Hobart or whatever. I want to send my kid to this, Groton or this or that, and we fight over who gets into a better school, or whose son has a better job, or who has a better car, or who's in a better neighborhood, or who has a more ostentatious house. Like most of this consumption is bullshit. We don't need it. So I think, and this is part of my like crazy New Deal idea, which is we need to stop taxing income and earning and start taxing frivolous consumption, status consumption, right? Like if you want the fancy car, you just pay 50% more. You pay 100% more. If you want, like the really nice penthouse in Manhattan, like as opposed to spending $2,000 a square foot, you spend $3,000 a square foot. And maybe that's how we finance some of this like transition stuff. I'm also a big hobby horse of if we get the hyper monopolization, we'll need 100% inheritance tax. And not because these people are bad, just because you cannot have Elon's 10 kids all being trillionaires, which will happen, right? It's just bad for society. Like maybe we let them have $1 billion and so it's not 100%, right? It's like after 100 million, you have to like give it away or something. I'm not saying the state should take this money. I'm just saying it's too disruptive. Like you're talking like, kings and queens type stuff. So I think we do have transitions. I think we do have back and forth, but I think the drive to consume is never going anywhere. It's like, and I think a lot of production is now non-monetized, right? When you think about people spending time making TikToks and Instagrams, they're producing things. They're putting energy and work into it that they're getting rewards from it, but they're not monetary. It's like a attention economy, right? What they call it. And somehow that ends up meaning that they can afford a trip to go to a fancy, hotel or whatever. But that's not what's really happening. What's really happening is they're competing for attention. They're working for attention. That's like kind of the new object of desire. So I don't think it's going anywhere. I think, we'll still have lots of drive, and it's how you channel those things and make things more efficient and just make the world better. Like, I really think that maybe I'm a Pollyanna, but that this is like the railroads, but better. It's like the internet, but better. Like all of that junk work just isn't going to happen anymore. That's magical.
Mm-hmm. Do you think in this world, these traditional macroeconomic models that we have, like the Phillips curve of comparing like employment to inflation, do you feel like those will have to be rethought, or is it just another piece of the innovation, productivity, technologically adoption cycle, and it's just the rules still apply?
So it's funny you mentioned the Phillips curve, because one of the great examples of Gödel's incompleteness is something called the Lucas critique. And the Lucas critique is a critique that comes out of economics, which says if you give people a model of the economy like the Phillips curve, what will happen is people will try to optimize on it. And so this is what happened in the 60s and 70s and led to the inflation, which is they thought they had this relationship between unemployment and inflation, and they kept hitting the accelerator. They were like, oh, amazing. Like, I want even lower unemployment. Yay, I want even lower unemployment. Yay, I want even lower unemployment. Yay. And it like worked for a while. And then they were so easy that when the oil shock hit, they were just super behind, and we got a decade of shitty inflation. So you get the very things you try to control, you almost bring into being, which is a super confusing, almost like self-referential idea, but that's an implementation of of Gödel, which is the more we try to control something, the less control we have in a lot of contexts, depending on the kind of vicissitudes. And so Phillips curve is a good example of that, where clearly there's some relationship between capacity in the economy and wages and inflation, obviously. Now, the problem is when we say, I really know that relationship, it's a 50 basis point relationship, and I'm going to keep going and optimizing it, and they break up their pencils, and then they're down the stream. That's a classic tale of failure, right? Think about LTCM as another example, where LTCM was so smart, they forgot to put themselves in the bloody models. So they're looking at the market and they're like, oh my God, this spread's amazing. We're going to make so much money. It's like, yeah, but if you go and buy that spread, you're like 80% of the market, you're going to get your face ripped off. And that's what happened. And so that's a classic overconfidence. It's a classic, you see it a lot with mathematical people. It's a thing that was beaten out of me at Bridgewater, and I think a lot of people, because that's how you get your face ripped off as a systematic investor, which is getting so high in your own supply, you kind of create the conditions that unwind you. So, yeah.
I love that. Okay, my last question is just one more of these potential tail risk scenario things.
Yeah.
It's, so far, a lot of this AI talk is still, it hasn't really breached mass society that much yet. So obviously sometimes we talk about, ChatGPT helped me with my homework or whatever, but it's still somewhat in the weeds of like what's really going on. I don't think that many people are fully aware of like how likely it is that we get AGI in the next 5 years or something like that. So my question to you is, if we get to a point where, I know you don't think that this will be the obvious outcome, but if we get to a point where, we start to see a lot of white collar layoffs, and then, you compare that with the passive investment thesis that has just been driving markets into the Max 7 and all of that, if that passive flow turns off at the same time that they realize, oh my God, my job is being taken by AGI, do you see any sort of like mass moment, similarly like COVID, how like people that were like focusing on COVID in like January and February were like, oh my God, this is gonna be so bad, but it took until mid-March for people to actually like, as a broad society, to come to terms with it? Do you think there's a possibility of some of those things happening with this?
I think it gets to the heart of this. Like, we made the machine god, but it's so expensive to run, we can't talk to it. Right? So when people think about AGI, they think about ubiquitous AGI. And they think about it mostly because they're thinking about cloud, right? But this experience of, I go to the robot, I use it, I'm consuming a lot of compute, and then it shuts me down because I use too much compute, is the problem, right? And it's a microcosm of the problem of, we're still actually pretty far away from having AGI on my phone that's not using Wi-Fi, is what I'm saying. Local is what we call it, right? And that's still years and years and years away. So in a world where you have AGIs in your headphones, AGIs in your phone, I don't know, man, all bets are off. But I think people are taking the notion of superintelligence and thinking that like, as soon as we create one, we can use one. That's actually the opposite of the problem now. We kind of know how to make them. That's now a solved problem. Now it's how to use them and how to deploy them. So that is going to hit while people figure out how to get these business models. And I don't think the unemployment, except for a couple sectors, like I do use less legal stuff now because I have Claude. I can just ask Claude, right? It's a pretty good answer. It replies to me instantly. So you'll see some of this, but I think it's this grit in the wheel, the grit in the sand, which is, so I don't know, like we had this whole conversation. I'm kind of saying like status quo. I don't want to be too like, boring or whatever, but it's like, I think it's mostly that people, their expectations for how much compute we need are still off by like an order of magnitude, way too low. And their expectations for implementation and use and productivity are still way too high. And that's just a really weird place to be in, where you can get an expectations gap, but it's not an expectations gap that can't be fulfilled. If we had all the compute, then we could deliver on those outcomes, but we need the compute. And so I'm still a person that thinks we need energy, we need compute, OpenAI will still make money for sure. And this is just a great thing for the world, actually, not a bad thing, which is why I'm such an accelerationist, which is why I was fighting, with these doers. Yeah, because I'm like, look, it's good for everyone, first of all. And second of all, if you do the thing we did, where now the only open source models in the world think that Taiwan's part of China, which you can ask them, and all the DeepSeek models say the same thing, that notion, that cognition, that meme is going to spread in all of the AIs in the world. That's bad. right? And who cares about Taiwan? It's just an example of misalignment, right? You're going to want models that are aligned to you. That's something that's going to take more compute. DeepSeek makes that easier, but it's not going to happen tomorrow.
Damn, a lot of mind blowing stuff there. Just to wrap it up, obviously, like our audience is primarily like focused on the macro stuff, and probably just I'm sure there's a few people listening. They're like, oh my god, I got to get up to speed on all this AI shit. It's like really happening right now. As somebody who's worked on the macro side for years, and now you're running an AI company. Any final takeaways to leave with folks that are within that mindset?
If I were you, I would try to play with the models like way more than people are doing. Like I think the knowledge about how the models think and the differences between them and all this stuff isn't just like weird techno stuff. Like it feels like the internet again. It's a really like revolutionary and liberating notion that I have this brain in my computer that I can ask anything and no one's watching, which is something no one talks about, right? But it's like you go to Google, you go to OpenAI, you know that you're going to get logged somewhere. And so maybe you take your question and you kind of make it 20% less crazy or whatever. What I found interesting over the last week or two was taking all these models and trying to break them and trying to see what they work on and what they don't. And that teaches you how the thing thinks. Okay. When you talk to DeepSeek 30 times, you try to break it, and it always does a chain of thought. Think, okay, what you said, da, da, da. Now you know how that thing works. Now, when you're trying to think about how to use models, it's not going to be one monolithic model. It's like, oh, I have a math problem. I'm going to go ask DeepSeek. Oh, I have a writing problem. I'm going to go ask Claude. And that's kind of the world we're going to. It's this really interesting creative time. It's really liberating. So I'd recommend that if you have any interest in this, like, go to Olama, like run the code in your computer. They're actually not that difficult to run now. And just play with the models, play with small models, like $1 billion, whatever you can run on your computer. And just note how you interact with the robot a little bit differently than you would if it was a Microsoft robot or a Google robot or whatever. And look at how they align those models, right? I made the joke about Taiwan and DeepSeek, but what you find is that the models coming out of Facebook and Llama, they're censored too, right? They have their own alignment. They call it safety, but they make that thing think a specific thing. And I think that that's the big takeaway to have, which is just, people call it CogSec in the AI community, which is kind of a joke, but it's real. It's like, think about the ideas that you're exposing yourself to. Think about the assumptions these models will have and how that will lead to different outcomes. And that will lead you to make way better decisions in how you use them, how you deploy them, how you invest on the basis of them. Like, don't sell NVIDIA because of DeepSeek if you haven't used it. It's just dumb. Like, go play with it. See what it's bad at, like actually get your hands dirty.
Yeah, don't just be a monkey. Alex, that was really great. Really appreciate that. Where can folks go if they want to hear more about your thoughts, your ramblings, your company, all of that?
So I'm active on Twitter. I'm kind of annoying on purpose. So if you see something that's too snarky, it's a joke. The joke is always me. I'm AB Campbell on Twitter. And then I have a blog called campbellramble.ai where I put a lot of these, screeds and stuff. But, I also try to put markets views in there a little bit. I'm not like a great single stock punter, but I have a pretty good track record at this point of like calling 6 to 18 month kind of stuff.
Amazing. Yeah. And Rose AI, highly recommend it if you're getting in the weeds of financial data and want to integrate it with AI. Big fan.
If you're trying to use this stuff in your financial institution, that's when you should blow me up.
Yeah, there you go. Awesome. Well, thanks, Alex. That was great.
Thanks for having me.